Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX. It's about 7 a.m. coming to you from the trading floor on this Monday, October 27th. Do we have a trade agreement or is this just more hype that's going to fall apart once again? And that's the big question before the markets this morning. We did see overnight markets trade notably higher, kind of across the board. Soybeans led the way in the commodity world. Crude oil, more reluctant to follow. Corn and wheat following soybeans. When we look at the stock market, we saw some gains there as well. Kind of this euphoria over the weekend news headlines of a possible framework deal with China, not just China, but other countries as well. I've often talked about the fact that we have an economy that's juiced with stimulus. In fact, as we look at M2 money supply, it is at or close to record high levels. There is a lot of juice in this economy. What's been holding it back is a lack of certainty. Could we be on the cusp now of removing that certainty, or are we setting the stage for another disappointment? This week will tell us a great deal. In fact, President Trump and President Xi of China are expected to meet on Thursday, and at that point, we should find out, are we looking at a new era in front of us, or are we looking at going back and intensifying the conflict before us? We saw that negotiators from both sides, China and the United States, met over the weekend in Malaysia and came away from those meetings with a framework deal. Now, what's in the supposed framework that we're looking at? First of all, China agreed to suspend its restrictions on rare earth minerals and magnets for 1 year. Now, that gives the United States time to continue to try to expand its sources of rare earth minerals and magnets that it needs. I highly doubt, nor do I expect there to be any specification of, but I highly doubt that China is going to allow export of rare earth minerals and magnets that could be used at military to build military, what do I say, weapons, those high-tech defense weapons that we used in today's modern warfare. I highly doubt that. I think China will continue to restrict that, leaving us vulnerable, and other countries as well. Now, many other countries have also spoken over the weekend about their concern. In fact, spoke directly to China even. This has been a big diplomatic weekend here with country leaders meeting and talking with one another, and a lot of developments, but we weren't the only ones confronting China on this rare earth minerals situation, but they have suspended for a year. That allows our manufacturing of products to continue to go forward. The United States has said it will not move forward with its additional 100% tariffs. China made some agreements on what they would do to restrict fentanyl and its components from coming to the United States. A lot of factors going into this. And I think that's critical. Now, what I think is most interesting out of this, and if you go back to my videos from last week, I commented about the fourth plenum meeting in China that was really occupying Chinese leadership last week. This is the political convention of the Chinese Communist Party. And I said, if President Xi comes out of that feeling like he has a strong support base, power base within China, that he might hold up stronger to President Trump and not give in, out trying to outlast him. On the other hand, if he senses some weakness in the power base at home, he may work for a quick deal with President Trump to calm the international waters in order to be able to focus on problems at home. And lo and behold, what have we seen come out of those meetings now? A quick desire to have a deal with the United States. Now, it's not a done deal. It could still fall apart before they meet. President Xi and President Trump meet on Thursday. But I find that fascinating that how quickly they're moving for a deal right now, even before we hear from the Supreme Court on the ruling on Trump's tariffs and the legality of Trump's tariffs. And I think that speaks volumes. Will we have a deal? We don't know. Now, in front of you, you have a soybean balance sheet, my soybean balance sheet. The left two columns is, first of all, the old crop balance sheet, which we already know from the September 30th stocks reports. We ended up with 316 million bushels. USDA has not updated their balance sheet since that report to reflect that yet because we've been having the partial government shutdown, so no WASDE report. And in fact, if we don't quickly get the government reopened, we won't have a November WASDE report either. And so that's a concern going forward. But again, that's the topic for another day. So if you look at what we're projecting now for USDA, ending stocks row crop 316 million bushels, that it becomes the new crop balance sheet of beginning stocks. And if we plug in our yield from our customer survey at the 1st of October, which we will update a week from today, we're at 53.9 bushels per acre. Now, I have factored in 1.530 billion bushels. But if we use USDA's 1.685 billion, that's ending stocks at 300. With my export target, that's 457 million bushels. What about all this talk about China buying soybeans? There's been very little specificity right now of specifics given about how many soybeans they're going to buy, other than U.S. officials saying they're going to buy lots of soybeans. Frankly, all they need is about 10 million metric tons, around 367 million bushels, to close the gap ahead of when new crop Brazilian supplies will arrive here in February. So let's say they buy that 10 million metric tons here in the near term. That would really help us hit USDA's target of 685 billion. 1.685 billion bushels. So ending stocks would be much closer to that 300 million bushel level, or actually, because USDA hasn't updated for that stocks report, it would be closer to around 286 million bushels. That's a number that is adequate to meet demand, but leaves very little margin for error should South America have weather problems during the upcoming growing season, or should we have growing problems next summer in our growing season. What if it's more than that? Then you look over here in my right-hand column, you see, depending on how much more, we start pulling that number down and could open the door for rationing. I said could. In reality, once South American supplies that are already on the books start arriving in February, Chinese ports are going to be pretty full and clogged up with those boats coming from Brazil. So in all likelihood, beyond the 10 million metric tons, we would anticipate that the bulk of their purchases, if this happens, would be for the next marketing year, certainly later in the current marketing year, perhaps the next marketing year. So that could prove to be a disappointment. Now, if they take the 10 million metric tons, that would still leave us kind of snug, still provide some support for soybeans, but not necessarily a reason to rally unless we have some type of a weather event in South America, which would leave us vulnerable to. But it would look better for next year. It would help for an acreage shift from corn to soybeans and maybe several million acres as we go into next year's planting season here in the United States. As we look at this weekend, as I said, there were a lot of dignitaries, a lot of the world leaders talking and having conversations. Another thing of note was President Lula of Brazil had a conversation with President Trump and came away from that saying that a deal is all but assured or guaranteed between the United States and Brazil to lower those 50% tariffs. That is a significant factor for the coffee market, for the beef market, if in fact that happens as well. We also saw President Trump meeting with other Southeast Asian countries, strengthening those ties as well. This was a big diplomatic meeting weekend for President Trump into re-strengthening some relationships with many of these countries that China has been trying to win their loyalty, shall we say. How will this all play out? I think this week is going to be pivotal overall. But putting it all together, if in fact this framework does go through, that certainly bodes better for the ag economy going forward and the components of the ag economy. It bodes better for the U.S. economy because we know there were a lot of stimulus measures in that one big beautiful bill passed this summer that to encourage companies to expand, and they've been holding back on those expansion plans until uncertainty is reduced. All of this could fall apart in the next week. All of it could fall apart. But there is real optimism this morning, and that's why the markets are higher. We'll continue to keep you updated as we go through the week. Until then, be sure to like and subscribe if you want to continue to receive these updates from the trading floor.